Morning, everyone. Good to see such a huge turnout. And I must thank Grace for choosing this venue in Jewel. I took over as the CEO of CapitaLand Group in September 2018. Apart from the Sanders-Singbridge merger, one of the biggest assignments was to get Jewel to open up in 2019. Open up with great fanfare, great crowd, great rental income, and the next thing we knew, COVID hit. And you see the slides on the right-hand side. Many of you may not know, when COVID first started, there was a tremendous pressure from many of the retailers who are running the shop asking for rebates, making sure that they could survive when there's no one visiting their shop, making sure that they can pay those rental income. So that was a difficult year. And it was also the year when we decided to restructure CapitaLand Group into CLI. So if you look at Jewel today, things are open up. I was here yesterday for the rehearsal. Big crowd, things are back. Life is at least back to normal. I think many of us actually forgot what COVID means and what life was like during the COVID days where there was circuit breakers, when they were not allowed 2% to eat, 4% to eat, and the person that was designing the policy, actually Gabriel Lim, at that point in time, who was with the Ministry of Trade and Industry. Okay, but going into the presentation proper, when we restructured, there were a few things we wanted to do. We restructured, created a company, asset manager, focusing on growth, wanting to grow fee income, wanting to recycle our capital, and wanting to make sure that we focus in the first phase to build our capabilities in Asia Pacific before we consider, of course, US and Europe. So that was how we started out. But I think many of you know better than us, during the last 3 years, the world has been quite complex. It's a general slowdown. We were hit by, the two issues that hit CLI the most was the rapid rise in terms of interest rates. The rise in terms of interest rates affect essentially the operating income from the properties, point number one. Second point is the cap rates were expanded, affecting valuation. And of course, the challenge around China. I think China, at the point of restructuring, the economy was still booming. There were two things that affected us from China. First, when we restructured the company, we had a great track record in China. We were hoping that China could provide the foundation for us to create a lot more private funds in the logistics space, in the business park space, and in asset classes that we were strong at. But, obviously, what has happened in China made it a lot more challenging for us to execute that. Of course, the second thing that happened is the balance sheet that we have inherited in CLI today was the balance sheet from the original CapitaLand Group that has benefited from the growth in China, building up a huge NAV because of the year-on-year valuation adjustments from China. That has served us very well in the old days. But obviously, because of the slowdown in China, there are balance sheet challenges that we as a group need to deal with. So that's just the big picture. But even then, over the last 3 years, since 2021, I think we make creditable progress. We recycled a total of 24 billion as a group from the balance sheet, from the funds, from the REITs, including 11 billion in China. Some of you may not be familiar. In our China the China team led by Zixiang. Zixiang, you want to stand up? Since 2021, Zixiang and his team has raised about $50 billion worth of renminbi capital in China. Definitely amongst one of the biggest manager, I would say, to be able to raise huge domestic capital in China And we believe that that's going to be the trend. It will be a lot more China for China. And because many of the capital providers in China have faith in the track record, of course there are challenges in China today, and we're also careful in the way we deploy, but that's going to be the path or the course in terms of how we grow China. Apart from just the capital recycling, we have raised about 17 billion of capital since 2021, 8 billion in the private funds, 8 billion in the listed funds and 9 billion in the private funds, and FUM has grown. Of course, with the recent announcement in terms of the partnership with SC Capital, Suchat is here, that has helped us to increase our FUM quite significantly. So in the last 3 years, despite all the headwind, we spent a lot of time building our capabilities in Asia-Pac. So China, I think that's sorted. We have problems to deal with, but we are confident that we should be able to continue to raise renminbi capital to help finance our growth and to drive our growth. Apart from that, India, the India team led by Sanjeev, we are amongst the leading players in data centers. I hope that we have more good news to share in the weeks to come. Where's Sanjeev? So wait for more announcement from him on India. There'll be, we are also amongst the biggest in logistics, owner-operator in India, and of course, business parks. And we believe that we are at the tip of the growth trajectory in India. CapitaLand has been there for 30 years. Just a sharing in terms of track record. First 10 years, we were losing money. From the Ascenders days, we were losing money. Second 10 years, we broke even. And the last, I would say the last 7 years, the India team did very well, delivering double-digit ROE returns for India. I must congratulate Sanjeev and the team. Southeast Asia, we were previously just focusing on Singapore. Patricia, you want to stand up? Created a few strategies. Logistics, modern logistics, raising capital to play in Southeast Asia. I think to capture the trend in terms of the supply chain readjustments and also building up and scaling up the business in self-storage. So essentially, I think we are laid enough foundation, and with 1 or 2 more partnerships that we are pursuing, I think in terms of capabilities for Asia-Pac, we will be quite self-sufficient to grow and to raise enough money to support the growth in Asia-Pac. I forgot to mention, we have been talking about private credit. We built our own teams, did a private credit business, put things on the balance sheet, and of course form a very strong partnership with the teams from Wingate. Nick is here in Australia, originating deals, underwriting deals, and I think there's a lot more pipeline in terms of what we could build, not just in Australia, but in broader Asia Pacific. And that's a strategy that we are very dedicated, that we believe we can build, and we can at the same time use our balance sheet to apply, to deliver higher returns. Just for your information, I mean, we put about $300-400 million of loans on our books. They deliver about 12 to 14%. And to be honest, I mean, at this point in time, we don't mind using more of our balance sheet to apply in a market like Australia because the returns are generally quite exciting. And a lot of these properties are properties that we are familiar with, and we are quite comfortable to support a lot more in terms of that growth. So, quick summary in terms of our fund management platform today, listed site from the point of listing 55B to 69B, private 32 to 44B. Andrew will go through the big conviction strategies later during his presentation. And our growth target, where we are today, it's about 100B. Our aim, as I've communicated earlier, is to go to 200 billion. In the past, Singapore and China used to dominate the major parts of growth for CLI. You will see us getting the growth a lot more from our other Asia Pacific countries, India, Japan, Korea, Australia, and also Southeast Asia broadly. China, we believe, long-term wise, will still offer growth, but in the next few years, we believe that the growth will be more tepid because of the challenges that it needs to sort out and overcome. Okay? But so what does it mean in terms of how we're going to achieve from $100 billion to $200 billion? Asia Pac, we have built up the capabilities. I think we have enough products. Spending time talking to LPs, talking to investors, given the brand, the reputation that CapitaLand has built up in Asia Pac, we are quite confident that we can raise enough capital from LPs to support our growth strategies in Asia Pac. We are quite confident. So the way that we really need to look at growth is to really look at US as a market. Is big, it is deep. I mean, we can leave the questions about US, do we have a right to play, how we're going to win during the Q&A. But I think US is interesting for us. Are we going to build everything from scratch? We have a team there. But I think a more relevant way to look at US is the big asset managers today, the big ones, they are seeing the deals, they are raising 80-90% of the capital. But there are mid-sized asset managers that are in need of looking for partnership in terms of strategic capital. In terms, I think that's something that as a CLI, where we have the balance sheet, where we have the capital, this is something that we can provide. Can we take stakes in these particular platforms, help to bring in Asian capital that's also looking for investment opportunities in the US, and subsequently look for platforms that in the US that have capabilities that can eventually be brought over to Asia Pac. So that's how we think about the US market. Balance sheet, I'll leave it to Paul to cover more later. And this is a slide, it's a slide without numbers, but it's probably the most important slide. To be an asset management company, it's really about people, about the culture. I was complaining and always lamenting with my team. We did a restructuring exercise. We essentially tried to transform CapitaLand from a developer with a strong asset management capability to a pure asset manager. So there's a restructuring involved, there's a transformation involved, and the third part is building up like a startup in the private fund space. And we are doing this as a listed company. Most people do startups in the private space where there's no requirement to do a quarterly reporting. But that's the cuts that we are dealt with, and we believe in the private fund space. We believe that as long as we can build up a good team, find good deals, deliver good returns, raise money, build fee income, we think that is the proper way of building stronger enterprise value for our colleagues and also for our shareholders. Sorry, just on the people side, as we build teams up, you may not get everything right. So we continue to adjust, we continue to tweak. We are prepared to make difficult decisions when it doesn't quite make sense. But fundamentally, the important thing is to make sure that you build a team that can deliver, and a culture, and a great culture that really focuses on making sure that whenever we look for deals, whenever we raise money, we want to make sure that we are doing everything, thinking on behalf of how to deliver high quality, consistent returns for our LPs, for our unit holders, and for our shareholders. So we're going to do from 100 to 200 billion. Paul is going to share with you the details in terms of how the numbers will all stack up, what it means in terms of the profitability, what it means in terms of the balance sheet. So, and Andrew will share more in terms of how we're going to execute and put everything together. I just got the timer reminder that my time is up. That's just the big picture. As a CLI, just a summary. We are positioning ourselves to grow. It takes time to build a fund management business. The foundation in Asia Pac has been laid, and we are confident that Asia Pac will deliver us the growth both organically and inorganically. What we need to prioritize is to look at US and Europe in a more dedicated fashion, which means that I'll be spending a lot more time in the US. Amongst all the investors here, I'm sure there'll be questions, there'll be disagreements in terms of how we look at US, but I hope that at least how I frame the issue would have explained to you how we are thinking about US as an opportunity for us. With that, thank you. I pass over to Grace.
Thank you so much, Chee Koon.